Hello everyone. So today I'll be analyzing the second stock in my 2025 stock portfolio, which is HBL Engineering, which was previously known as HBL Power. And this stock is ranked second globally in the industrial nickel battery segment and third in India's VRLA lead battery segment. And it's also the only manufacturer of PLT lead batteries in the country. And I like the stock particularly because it's well positioned in the market as per the trends that will be coming up in the future. For example, the battery segment, like I mentioned, and then it's also in defense and aviation. They also supply the military, and they are in electronics as well, with in the railways, and with Modi really pushing, with Prime Minister Sir Narendra Modi ji really pushing the uh, railway sector. He's I think almost doubled the amount of railways. So this is beneficial for this company, especially due to their coverage system. This plays a huge role because there is heavy investment in this project by the government, and yeah, their domestic sales were 87% in FY24, which means domestic sales are actually increasing and their exports are actually decreasing because the domestic demand has increased. But yeah, they do export a lot of countries, as mentioned here, and they are implementing a capex plan of about 100 crores in FY25 to make high energy density cells in house, which is good because if the Trump administration decides to put tariffs on China, then a lot of those orders would shift to India, and some of these companies would benefit a lot. However, we're not sure if Trump will impose these tariffs, but still, it's this company is in the right space in terms of making cells in house because even India will require a lot of batteries, and we are also moving towards less reliance on other countries for them. And the government is also pushing this through the PLI schemes. Recently, they did do an investment in Tonbo Imaging, which is also surveillance systems and reconnaissance and all that, which is provided to the military. And yeah, as I mentioned, they changed the name from Power Systems to HBL Engineering Limited. So I just added a small section of how they make money exactly. It's mainly through specialized batteries and power electronics. And as I mentioned, defense, electronics, aviation. They're also in the telecommunication space, railway, and defense space. And even the telecommunication space is poised to do well because of the rate hikes, and the whole industry is becoming more profitable, and they're expanding their networks as well. So we can just actually go to screener, and this is because the name changed, that's why it doesn't show the previous graph, but we will find it here. Right. So straight away we can see that the stock PE is higher than the industry PE, which is not good in terms of the valuation. But If we go to 5 year and we go to P ratio, the median P is 44.5, which is higher than the stock P currently. So I think it's it's still a good opportunity to buy the stock, and it has recently corrected. Here we can see that check the price. It did recently correct, and it's now back below the 50 and 200 day moving averages here, right? And if you look at quarterly sales, you can see that um, they are increasing steadily and slowly, but it's consistent growth that is coming. Uh, it did flatten out a bit here, but there will be substantial growth ahead, is what I feel, due to all the factors I mentioned with the coverage trade system and us expanding the railway network, as well as the telecommunication network, and the whole of India moving towards batteries and battery technology. Um, let's look at the profit and loss account. So sales are slightly inconsistent here, uh, but yeah, last year has been uh, their highest amount of sales here, which is good. But yeah, it is not a great thing that the sales have been pretty inconsistent across these years. Um, but recently, if you look, they have been increasing here, right? And so has their operating profit margin, uh, came to 19% over here. And if you look at the profit, net profit, that has also increased here. Again, their EPS has also increased a lot in recent years, and their dividend payout seems to be a bit inconsistent as well. So that's something to look at. Then, if you look into the balance sheet, they have a good amount of reserves, and comparatively, their borrowing is pretty low, and it's more of short term borrowing, less long term borrowing, and lease liability. Their fixed assets have also increased in recent years. Buildings, plant machinery, equipment, pretty much everything actually. They've increased in their fixed assets. And if you look, their gross block has also increased, which is good. And if you look at the cash flows, their cash flow from operating activity is positive, which is pretty good. And it's mainly all just profit from operations, which is like higher than all the other years. Then we can look at investing activity, where uh, they have fixed assets purchased, which I mentioned, and also about 100 crores was spent on acquisition of country companies, which I will discuss later on. If you look at financing activity, they repaid some loans that they had, they paid interest, they paid dividends. So yeah, nothing much to see there, and their net cash flow is positive, which is good. And again, it's been increasing in the last couple of years. So while in the middle somewhere, uh, this company was a bit inconsistent, I feel now it is headed in the right direction, and all the industries it is in um, are more future oriented, which is good for them. Their debtor days have reduced as well, and so have their inventory days, and their cash conversion cycle is also at its lowest, and so is the working capital days. So all positives here, and their ROCE is also um, pretty high at 36%. Then we come to the shareholding pattern. Here it's about the same for promoters. But if you look, foreign investors have actually increased their shareholding here. Um, and then, yeah, I think we can go back to the right. So I think I mentioned all these points, and I also mentioned the investments that they had were about 99 crores, right? So they invested in Tonbo Imaging, which was about, again, surveillance and military equipment, electronics, as well as Mobius Power Electronics. So these acquisitions will also be extremely beneficial for the company, and uh, like they are, they can create synergy and basically benefit it. And this was their report, which we will have a look at. So this is financial information, but we've already gone over that. So yeah, they mentioned how the development of both the product and customized equipment made in-house, which reduces capital cost and makes production even at small quantities viable. And recently we did just read that they were working on the battery technology and making that in-house, which will benefit them in the future. And here they have their business segments, which is the nickel batteries, the lead batteries, the two different kind of lead batteries, as well as lithium batteries, right? And again, this in the railway industry with the Vande Bharat trains, and defense business batteries for aircraft, missiles, torpedoes, submarines, etc. And with so much political and global unrest these days, the defense expenditure will definitely be high. And again, already talked about the railways, the covered system, as well as the management system, centralized train control systems. Another thing that stands out is electric drive trains for heavy electric trucks. So I don't know how much this segment will grow, particularly in the future, or how viable it'll be, but it is um, future oriented and it looks pretty good. So you can just read this about their future business model. So this is the possibilities that they mentioned in the next 4 years. They mentioned that FY24 was an unusually good year, and they cannot expect such growth to continue. However, they mentioned in the second sentence that FY25 sales may be about the same as FY24. And then they mentioned that they may be 30% more than FY25 sales. So uh, basically, they depend on the coverage tenders that will be issued by the government, and this may increase the revenue substantially depending on how many orders they get. But uh, we know that they will eventually get these orders, so the company will do well in the future. Alright, so we can see most of these graphs going up, which is good, except for but the debt is actually pretty low, so it's not that bad. They have high reserves, so not much to worry about there. Again, this one is about their batteries and the major uses in different industries. Since they have so many industries that they supply these to, it's really pretty it's pretty good for them that they are very diversified, so they can basically pivot to whichever industry needs more batteries, right? And I'm extremely bullish in this sector because um, yeah, the uninterrupted power supply needed by data centers, offices, hospitals, this will go up in the future. And we know that data centers are being set up everywhere, and people are focusing a lot on these. And India's power needs in the future will be extremely high with the amount of population that is there. And as we're moving towards electrification and batteries, this company is just in the right space and has strong ties to the government already due to them supplying a lot of defense equipment. Yeah. This one is about the coverage, train collision avoidance system, centralized train control system. This is about the electric drive trains. Yeah, so here this is mentioned reason why people would shift eventually to electric trucks is due to the cost mainly. So what they did was convert old trucks to electric drivetrains. Right, so that is about it from the investor presentation. Right, so if you look at some of the websites, they mention that it has 11 strengths and 6 weaknesses, like money control and sorry, can you see my screen? Yeah. So they have a forecast of 730, which is 38 percent up, and is a strong buy. However, we can't exactly rely on this because it's just one analyst rating here. Based on their past earning performance, we can see that it passes all the criteria checks, and its revenue has been growing consistently. Again, balance sheet health also looks pretty good. Short term liabilities are low, long term liabilities are also low. The debt level is low. They're reducing debt. So, all good here. The management is also pretty good with a tenure of 14.25 years CEO. Uh, so, yeah, everything looks good here. The leadership team has an average tenure of 3.1 years and are experienced. And even the board members have an average tenure of 6.6 years and are experienced. The technical suggests a strong sell, but since we're investing for 1 year, the analyst rating is a strong buy here. We can see that the stock is at a premium valuation at this point. As you could see that the P ratio of the stock is currently higher than the industry PE, but I believe that the stock will continue to do well because there are a lot of growth triggers, but there's nothing negative apart from the fact that they are dependent on the coverage orders, which they will get eventually. So I don't see a problem there, which is why I had said a 30% upside for this as well. So yeah, in the next video, I'll be discussing Adani ports and special economic zone. So should wait for that one.